Welcome to VC Evolve podcast. Every week, we bring you insights and reactions from top VCs reacting to latest news on MENA startups and investments. Stay tuned for expert analysis and maybe some heated conversations. Let's dive in. Our VC guests today are Khaled Talhouni, Managing Partner at Nuwa Capital, Sara Ebeid, Principal at Venture Souq, and Waleed Al Ballaa, Managing Partner at Sukna Ventures. In the description below, you can find more details on our guests, their LinkedIn profiles, websites, and portfolio companies. Our weekly news are brought to you by FWDstart, a news aggregator that sends you MENA news directly to your inbox twice a week. And from FWDstart, we have Jamie. What's happening this week, Jamie?
Good morning, Ahmad. I feel like I've just actually committed a cardinal sin of podcasting by saying good morning, because this could be released at any time. But we're going to just keep the ball rolling here, pretend I didn't say that. Look, first things first, just want to reiterate what you said there. And thanks so much to the three guests for hopping on this week. It's a pleasure to have you all. I am in a fortunate position to be able to start with some good news today, some really good news, which relates to Rasan's IPO, which took place just before the Eid holidays. So for context, Rasan, they're Riyadh-based insurtech startup, and they made their debut on the Takatkah exchange on June 13th, just before the Eid holidays. And to the best of my knowledge, and I'm open to correction on this, I think they're only the second Saudi tech firm to go public, following Jahez, which I know listed on Nomu back in early 2022. So look, I think it might be helpful initially maybe to just provide a small bit of context and background on Rasan itself before I start diving into the nitty-gritty of the IPO itself, and what was involved there. So founded in 2015, 2016, or 2017, depending on which news source you're following. There seems to be enormous disagreement on exactly when the founding year was. But you can rest assured it's somewhere between that date range. Founded by Waleed Al Ballaa. The startup operates Tamini, which is Saudi's largest online insurance aggregator. So it helps users to compare, purchase, and renew insurance for vehicles, travel, health, so across multiple different segments. In terms of funding history, it's just raised remarkably only 24 million in disclosed external financing, and that was back in a round in 2021, which was led by Saudi VC Impact 46's growth fund. It was also, I believe, the first growth stage insurtech deal in the kingdom as well. So in terms of user base, serves over 10 million users, operations primarily in Saudi, but offices in Egypt and the UAE as well. In terms of numbers, 2022, customers used Rasan's platform to buy insurance policies worth $1.2 billion. And in 2023, posted 256 million Saudi riyal in revenue, adjusted core profit margin of 28%. So look, that's small bit of context and background. In terms of the IPO itself, then, began on May 5th and highly successful, oversubscribed 129 times. So initially priced at 37 Saudi riyal per share, attracted $29 billion in orders. The aim was to raise 224 million, and shares surged 30% the first day, so closed at 48 Saudi riyal. And the shares have continued to rise since then. It's actually trading now at about 60 Saudi riyal as of this morning. So the market cap is approximately sort of $1.2 billion US.
Maybe I'll start with Waleed first. Let's start with your general thoughts about this IPO.
It's definitely exciting news. Everyone's waiting for exits, and now we see this one, and it's successful. There's lots of appetite in the market for it. And it's a net profitable company. So also something that is very notable. I just want to make a small correction. It's not the second tech IPO. It's the second tech startup IPO. Otherwise, there are system integrators and some other software houses that actually came out. We just saw news today for Azm, for example, that was in the Mu market. They're now moving to the main market to Dawel, and there's some other players as well. Probably the biggest one is Elm, which was, a PIF company, and now it's a giant in Tadawul.
So maybe
overall,
Waleed, this is a good segue to explain the difference between Namo and Tadawul.
The Saudi government is keen on facilitating companies to go and list their stock and allow retail investors to join the growth journey of these companies. For the main market, the regulation is really strict in terms of reporting, compliance, other financial requirements, and so on. So what happened is Numu was created as a secondary market to Tadawul, and has less strict requirements, so that it becomes easier and less costly for companies that want to take that route to go there. On the other hand, not all investors can participate in Numu, only qualified investors, and that there's a good reason for that, which is this is a more risky because of the less requirements, so there's some protections that need to be in place for them.
And as far as I know, it's not an immediate exit for existing investors. There's a lockup period of maybe 1 year, right?
For like most other markets, yes. There's no immediate exits. That's correct, sure.
Khaled,
just jumping in here. Yeah, I think I echo exactly what he was saying. This is super, super exciting news because firstly, it crystallizes this idea that you can generate a return through an IPO. I think this is the second, venture backed, let's say, and I take the point that Waleed says around that. There have been technology IPOs. So I think that's super exciting. The second point is I think it's part of a wider trend in the deepening of the regional public markets, particularly in Saudi, and to a secondary degree in the UAE. But I think it really shows that there is so much pent-up demand in private wealth around accessing basically innovation assets, or the assets of the future that are going to drive the economy forward. This has really been facilitated by the government through the way they've sort of supported the public markets, either on a regulatory side or in other ways. So I think it's a great omen for what's to come, particularly how oversubscribed the listing was, and its kind of initial ramp up, its initial kind of pop on its initial share price pop. So I think it's a really positive thing, and I expect there to be a lot more coming. And like I said, I think it's part of a wider change in the perception of public markets and a wider move towards putting all kinds of assets on public markets. The deeper the public market becomes, the easier it becomes to list businesses, and the more you can crystallize the value as more velocity and volume are on the exchanges. So yeah, I think it's really, really positive. I think one slightly cautionary tale is that we should wait till the end of the lockup period. Yes, it's a normal period, but it is quite a long period. 12 months is not short. And like Jahez, the price dipped a bit after the expiration of the lockup period, but not so dramatically, but it did dip kind of significantly. So I expect we'll see what happens at the end of this. So it's important that the list price remains sort of stable post lockup period, if you see what I mean, generally, just to kind of validate that list price. But yeah, these are all kind of growing pains, normal part of a growing ecosystem. So, but yeah, generally super positive, very exciting. Expect another, I think, unless the macro conditions change very significantly or the nature of liquidity on the market changes very significantly, expect another, 4 to 5 in the coming 12, 18 months. Tech IPOs easily.
Khaled, I hear you saying it's positive and it's exciting, but you don't look excited. Maybe Sara will look more excited. Sara, we had multiple IPOs from MENA tech startups, but maybe not in MENA. We have some Egyptian companies go public outside the MENA region. What do you think about this move now, and how do you compare it with previous IPOs outside the MENA region?
Yeah, so I started on my career investing in Egypt. For the past 2 years, I focused on investing in the Saudi market instead. And there's two things that excite me about the Saudi market, which they just mentioned right now, is definitely the fact that the Saudi government has introduced a lot of regulatory framework that is attracting international investors, which has brought in growth capital and has also brought in M&A opportunities that we saw with Delivery Hero acquiring Hunger Station, for example, and also launching alternative channels for local startups to exit, such as Nomo, which we saw with Jahiz. With this IPO happening and it being oversubscribed, I think like 129, just like they mentioned, is really strong testament for the demand, and hopefully that sets a precedent for future IPOs. But I think what we're going to watch out for moving forward is sometimes at time of IPO, there is a lot of demand, but it's all about how can we transition this to liquidity post IPO. So one of the things that we've been doing is we invested in a company based out of Saudi that is going to offer market making and liquidity services on Tadawul. So we have really strong conviction that the capital market in Saudi is going to increase. So we just recently did this investment to kind of leverage on that. Talking about other IPOs in Egypt, Swivel and FWD both did really well when they launched, now are under the $1 billion mark. But I think Swivel could be, like FWD is still doing exceptionally well and is a huge success story for the Egyptian market. But I think Swivel will be even more interesting because I believe it got to a point where the stock price dipped to like 150. And now they've completely pivoted. They're now profitable. They're growing again. So I think if this ends up being a success story, it will be a very unique case study that it would show how resilient the founders were despite all the turbulences that they experienced.
I actually have gone through Rasan's prospectus, and it's a very interesting read. And I'm always glad to see exits because one other reason is to build my comps and see how a venture-backed company actually performed in terms of revenue, strategy, and so on. And what's interesting there is the kind of strategy that Rasan has in place to actually continue its growth story. Rasan, as a company, they have 12 products, but the main product, most of the revenue is actually coming from one product called Ta'mini for motor insurance. Then there's Ta'mini for health, which comes at the second place, and then the other products. Ta'mini Motor, for example, what they're doing is they're trying to deepen and widen the value proposition, cover more of what's happening during a life cycle of an accident, for example. Even what happens to total damaged cars and the life cycle that happens to the vehicle afterwards. So it's very interesting how they describe their growth. And what two other stories also that are very interesting is they show the market share of aggregators, digital aggregators versus the traditional players, direct brokers and agents. In 2019, the aggregators market share was something like 37%, and now it's in the mid-70s. So there's a digital transformation here, story where consumers are actually going to the digital channels. And the other story is how regulatory push actually helps, adoption in any market. So in Saudi recently, the government started activating electronic monitoring for motor vehicle insurance. It's mandatory. And if you're not insured and the camera captures the license, you'll get a violation. That is also helping Rasan improve their growth in the motor insurance side as well. So I think there's lots of nice, interesting tidbits in the prospectus. So anyone interested in this space in general, I would definitely recommend it as a good read.
Thank you for sharing, Waleed. Here's a crazy question. So we saw startups from the MENA region getting listed on NASDAQ or New York Stock Exchange. Are we going in the future, in the next, 5-10 years, going to see foreign companies getting listed on the Saudi or Dubai, Abu Dhabi stock markets?
That's a great question. I think, we do have companies listing on NASDAQ, but as you've seen, both in the case of both Swivel and Rami, they've not really done that well. There was also an older listing, if you remember, Aramex on the NASDAQ in the 90s.
Yep.
I think that was the first one. And also, I think didn't do as well. And the reasons for that are basically, you have to understand the makeup of the capital on those exchanges and their interest in specific markets. And unless there's some familiarity with those local markets, it's hard to kind of attract capital to trade on those stocks. So I think I think that explains why, for example, there's much more interest both from institutions and retail for both Jahed and Rasan on Tadawul. But if you were to do those both on NASDAQ, would they create the same kind of volume? I suspect not. So I think it's important that there is a connection between the public markets and the underlying assets and where they're being listed. So you want to list locally because there's familiarity with that, with the underlying product and the underlying business. So, to answer your question, the inverse of that is, do you get global companies to list in Tadawul or in regional exchanges? Possible, but I think they would suffer from the same problem, right? Like just in reverse, like are local investors as familiar with global assets to do that? And the other thing is, yes, these markets are growing very quickly and we're all kind of excited about it and positive about it, but they're still way behind, the top market exchanges in the world, especially if you remove Aramco from Tadawul. So if you, as an outlier, then we're really behind in terms of volume, because you want volume and velocity on the exchange. And we're still in depth and market capitalization to be very deep. So we're still quite behind. So I can't see that many companies wanting to kind of list locally unless there's some kind of strategic angle or there's some other dimension aside from just, the best performance of the stock on the exchange. There has to be another dimension for it to work. Either the shareholding is deeply regional or something like that. But ostensibly a foreign-based company with foreign operations listing here you would have a little bit of adverse selection. So you wouldn't want the best companies wouldn't want to kind of come list here still. Maybe that'll change in the next, 20 years, 10 years, as the nature of these markets change and shift.
I think Khaled makes a lot of good points, and I'd like to add another angle. So definitely, the US market is choice number one for any large company that wants to go public. The UK, for example, is a classic example of a lot of these UK-based companies leaving the UK, especially fintechs. They want to go and list in the US because of all the advantages that Khaled mentioned. Having said that, there was a very interesting conversation happening in the investment community after Philippe Levant, the managing partner of Cotu, the large investment firm, he said something recently, which to the effect of, if you really want to succeed in an IPO in the US market, you have to hit at least $1 billion in market cap. Otherwise, it's just not going to attract enough interest. You're not going to have a successful IPO. A lot of people push back, including Bill Gurley and Brad Ginsler from Altimeter and others. But still, he makes a very interesting observation, which is size matters in these US markets. So for a local company that wants to go outside, they're definitely going to have to consider this versus the local appetite, versus the interest, versus the local support that they're getting from regulation. But it's a very interesting question. Yeah,
I feel we can talk about those IPOs forever.
Yeah.
Before moving to the next story, a quick shout out to Impact 46, because according to the news piece, this is their second IPO. They invested in Jahez, and now they led the investment, the latest round in Rasan, and they helped take it public. So would love to have you, Impact 46, to tell us more about how you did that.
I mean, it's really remarkable. Really remarkable. Yeah, it's like, it's got the Midas touch, especially the first two. That's really something.
Okay.
Well, let me say something since we mentioned Impact. I have a lot of admiration for Abdulaziz and Imran and his team. Abdulaziz is one of the original OGs in the ecosystem, having been part of founding an angel group before this called Uqal, which is one of the oldest here in GCC. But they are taking a very different strategy than most other VCs in the region. Even us at Sukna, they are based in Riyadh. They're a CMA licensed fund, and the way they think about these deals is kind of different. That's why, for example, they were the only VC in Rasan and Jahaz as well. So this is very interesting in many ways, but also it's good news for the VC community, because we're seeing now local vintages, at least from Saudi. We've seen that before in UAE as well and other places, where we're seeing good news for LPs that are considering VC as an asset class that they want to invest in. That now they're seeing, one of these vintages actually performing well. So it's going to open up their appetite for other VCs as well, hopefully.
Yeah, love that. And hey, please connect us so that we can host them here and they
Can
can
do.
share their secrets. So Jamie, can you tell us about Connect Money?
Yeah, absolutely. So let's change gear and we'll look at a funding announcement. So Connect Money, they're an Egyptian-based fintech. They've just this week secured 8 million in seed funding from VC firms, including DisruptTech Ventures, Algebra Ventures, and Lorax Capital Partners. So they're a banking as a service startup. So they help businesses issue white label debit and credit cards, enabling trade companies to offer a range of financial services to customers. So the startup was co-founded by Ahmad. So he's a wealth of experience from previous ventures, including co-founded Lucky One. And he also played a key role in launching D-Squares. So they're a loyalty platform provider operating across several markets. And I believe that they're set to IPO in Saudi Arabia at some point in the near future. I know there was rumors potentially of a SPAC back in 2022, but I know that was dispelled. But in any case, coming back to Connect Money, it might be helpful actually first, just for the benefit of listeners who aren't aware, banking as a service, just a brief kind of explainer on that. Essentially allows non-bank businesses to offer digital banking services like payments and lending by using APIs from licensed banks. So the advantages associated with that obviously saves businesses time, money, and effort by letting them offer financial services without needing to build their own banking infrastructure or get regulatory approval. So the business model for Connect Money, so is a subscription-based model. So businesses pay a monthly fee per card. This helps them to avoid large upfront capex and simplifies offering financial services. So in terms of target markets, starting in Egypt, they plan to expand to Morocco and Kenya, which obviously have growing fintech markets and high demand for digital financial services. Just in terms of use case, very briefly, super versatile platform, can work across many different sectors. So for example, agriculture, supply chain companies can issue cards to farmers for easier payments and credit access. And also businesses with long settlement cycles, they can benefit from instant payments and disbursements, which obviously can improve cash flow management.
Thank you, Jamie. I'll start with Sarah this time because this is in Egypt. So Sarah, This is, for me, it's a big news because it's a seed round, but at the same time, it's $8 million. And the company was started this year, 2024, right? And they have, I think, like it's a big team, maybe 11 or 12 team members. So are we starting to see this as a new norm? $8 million seed round?
Well, I think this deal specifically is also a bit unique and novel in the sense that, both founding members previously built D-Squares, which was the end-to-end loyalty service for merchants. And then they transitioned and they also built Lucky in 2021, which was a digital app for consumers for rewards and cashback. And now they're building Connect, which is targeting merchants issuing debit credit cards without having to build the infrastructure or obtain the necessary licensing. So they have a track record having built a network across both customers and merchants. And we're actually also investors in Connect through our investment in Lucky. And why this is pretty novel and unique is I don't think we have came across this in the region in a while, where you have a lot of overlapping shareholders, but each product is fundraising completely siloed and independent from the other companies. So I think this is a very unique investment because there's not a lot of folks in the region who have fundraised through that structure. So we're excited to see it play out, but I think definitely it is a bit of a larger round, but I think the founder's track record plays a big factor in that.
I'm glad we have Sara with us on this. So is the 8 million all equity or some of it is debt?
It's all equity.
All equity. Very, very interesting. You know, in general, I'm very excited about embedded fintech. You know, it's definitely what we're seeing in the market. Companies taking banking services and making them features on their platforms. You're seeing this done by Uber and all the other big platforms. So embedded fintech is something that is, you know, enabled by technology and regulators alike. It's a huge market. BaaS alone, according to some research, is around 22 billion, around 2032, with a CAGR of 20% almost. Having said that, I'm also happy that this round happened after the problem that we heard about in the US. So there's lots of lessons learned from the fallout between Evolve and Synapse. I'm pretty sure that Sara and the other investors looked at that. That was a huge news in the BaaS world, where basically people who are using the BaaS service, like a company called Yota, you know, it's not clear. They're saying $86 million is unaccounted for. So there's some ledger issues between Synapse, the BaaS provider, and Evolve, their banking partner. And it's a very big mess now that is being sorted out in courts. And that's very natural because, you know, it's a new field. So there will be some issues. Regulation is going to have to be catching up with the details and nuances. But at least we can learn from it here in the region and improve it. And I can see the two very different markets, very different use cases. But at least for timing wise, we can also learn from Synapse. And definitely, I think Sara and the other investors took that into consideration.
I think the only thing for me I wanted to add was I think it's very interesting as a positive omen for what's coming in Egypt, because I think over the past 24 months or so, 18 to 24 months, there's been a real drying up of investment in Egypt. There's been not that much activity, and this is a really interesting one to kind of come up very, very aggressively with a large seed round. And I think there are, if I'm not mistaken, a few other deals being done right now of that size, maybe not the seed stage, which I think is heralding a shift in momentum in Egypt towards a bit more velocity in terms of deployment of venture dollars into that market. So yeah, so I think on that side, it seems like quite a good omen for things to come.
Another question for me is why fintech in MENA region is so sexy and has been sexy for a while. Why everyone wants to invest in fintech? We have other, you know, energy, we have agriculture, we have a lot of other fields, education. It seems to me that everyone is talking about fintech and very excited about fintech and wants to be a fintech fund. Why?
I'll take a shot at this first, and then maybe I think VentureSouk have a dedicated fintech fund, so they can talk in depth of that. But I think from a distance, for me, why there's interest in fintech generally is I mean, the financial services sector, the traditional financial services sector is so massively underdeveloped, even in the GCC. The level of kind of the unbanked and underbanked, even in the GCC trails some places in sub-Saharan Africa. So especially on the consumer side and to a lesser degree on the B2B side. And the reasons for that are structural, like the nature of the economies in the region tend to be such that the financial services system set up to lend or to service, particularly lend to state-owned and government-related entities. And the banks themselves are owned by disproportionately by the state or the state indirectly. So you have this sort of kind of virtuous cycle where someone once told me it's like friends lending to friends, basically. It's just all kind of related parties lending to each other. And these businesses have been able to, these big banks and financial services institutions have been able to build reasonably large businesses, profitable businesses on that model, which is, you know, serving related parties effectively. And so they've never really had to kind of deepen that infrastructure and kind of widen their base. And so that's left huge parts of the economy just underserviced in a way or ignored, which explains the massive success of companies like Tabby and Tamara. So if you look at BNPL in the rest of the world, particularly in the developed world, you'll see that BNPL really serves disproportionately subprime credit, meaning those who are less creditworthy, who have maxed out credit cards or have not great credit scores. Whereas here, Tabby and Tamara actually serve a huge chunk of the consumer market that simply is underpenetrated for consumer credit, who are kind of prime borrowers. They're creditworthy. They just don't use their credit card or don't have a credit card, which explains why the NPLs, the non-performing loans for both Tabby and Tamara, are way below what they are in like Klarna, for example. And so that's kind of part of, I think, the reason why there's kind of an interest in financial services and fintech generally. Having said that, do I think that there is a little bit of an overhype in fintech generally? Yes, I think there is a tendency to throw money at fintech here because of that kind of large structural reason. And one of the on the other side, why it's a bit of a problem is it's hard to create scale in financial services in fragmented markets, meaning because each country has its own regulatory framework, its own consumer behavior, its own kind of structural issues. Really, to scale, you need to be in 2 or 3 or hopefully 4 countries, and that's a kind of bit of a cautionary tale. So like Tabby and Tamar are able to scale both UAE and Saudi. Tried Egypt, mixed results really. But I think to create the next level of scale, to get the $10 billion outcome, you need to have 4, 5, 6 countries. But that's very hard to do in MENA, in financial services, because of it's highly regulated, and each country has a sort of a moat around its its consumers, driven by its kind of regulatory framework.
And Sara, since you have a fintech fund or a dedicated fund for fintech, can you tell us more about why fintech?
Yeah, so VentureSuite, they launched the first fintech-focused fund in 2020, was investing across the MENA region and Africa. And I strongly believe that fintech acts as a foundational layer for every other sector that VCs can invest in. Just in Africa, I believe 70% of the population is either underbanked or not banked at all. So that we cannot invest into additional sectors without making sure that foundational is healthy and robust. So that is what we do. However, having said that, we do invest in fintech enabled and fintech adjacent, because like Khaled mentioned, I think it is a bit overhyped, and because the region is small, you need to open up the sectors then which you invest in, as well as the markets, because we haven't really seen a fintech success story just based on one market. I'd say one of the ones that I can think of right now is Tabby, and even them, they had to expand to Saudi as well to achieve the growth that they have right now.
I think it's very clear that there is a bubble at fintech, but having said that, you can't dismiss the fact that there's this phenomena that's happening in economies across the world, which is financialization. So the role of the financial services sector is actually increasing. In the US alone, it's like 7.5% of GDP. They make up 20% of all US corporate income in that country. So that's also another fact that needs to be considered. The other fact is the fintech has only been opened up recently, relatively speaking. The regulation, in the US and later on here in MENA, only happened in the last few years. So there's still lots of low-hanging fruit that hasn't actually been exhausted by fintech. So there's lots of innovation that still needs to happen. Embedded fintech, like what Connect Money is doing, is an example of that. There's lots of other examples where their role is actually needed to serve the unbanked that Khaled was mentioned, whether they're consumers, SMEs, and others. So the demand and the need is definitely there. But there is a bubble. There are some categories that are not being built in the right way. They're not taking into consideration the fundamentals of a financial product. And that's part of the learning and maturity, I guess, for this sector.
So this is a specialized investment thesis, like you invest in a specific sector. Now we're talking about fintech. In our next story, we'll learn about a new fund that's investing in AI. And I'll let Jamie tell us the story, and then I'll ask about specialized versus generalist funds and which one makes more sense in MENA. And then we'll talk, of course, about AI. Jamie, take it away.
I was going to say, if fintech is sexy, I don't know what that makes AI.
Yeah.
But, yeah. So Simple Holdings, they've launched a 10 million fund. So they're an Abu Dhabi-based family office. So they've launched Simple Fund 1 to support tech and AI startups across MENA and beyond. So the fund will provide seed capital and strategic services to promising startups. So the founders of Simple Holdings are second-generation serial entrepreneurs. In terms of companies that they've invested in so far, one is Actualize AI, another is Scylla & Co. It's a PD and AI company.
Before we talk about AI, I know it's a big topic and we will talk about it, but let's talk about specialized versus a generalist fund in MENA. Which one makes more sense?
Yeah, I think I'm personally right now, I still think that it is a bit early to do specialized sector funds in MENA. That may change in the coming 2 to 3 years, I think. But in terms of the depth of opportunity, I do think there aren't that enough opportunities in any specific sector to overcome adverse selection in investment as it stands right now, especially at venture, so meaning seed to Series A. Is there an opportunity for a growth fund or a late stage fund that is very sector focused, say very concentrated, 5 assets, late stage, pre-IPO, pre-exit, let's call it $10 to $20 million tickets? Yes. So I think you could do there are a couple of sectors you could do that in, fintech being one of them, to say, look, I'm just gonna put $20-30 million in the best performing breakout assets in this segment, and that's it. It's a highly risky bet, but it's a workable bet, and you could probably do it. But venture wise, I don't think you can do the trade-off and risk reward in any sector today at the early stage. I just don't see it so much. It couldn't change in the next 2-3 years, possibly. I definitely don't see it in AI for sure. I mean,
so AI is a technology. Yeah. I would say AI is a technology, not really a sector, right?
Exactly.
So maybe AI would be applied in different sectors. So this is like a specialized tech fund. Yeah.
Yeah. If you dilute the definition of the sector fund enough, then I guess the point is moot. But if you're really doing, I don't know, if you define it, because it's not really defined in the announcement in this particular example. If you define it as, I don't know, I'm investing in the actual infrastructure of AI, LLMs, whatever, definitely there's no opportunity for that in MENA, I don't think. If it's, we're going to invest in companies that use AI for operational leverage, then that means you can invest in anything, basically. And then you're just really using AI as a kind of like a thesis into how you want to invest in companies, how they use AI, right? And that's an interesting play for sure. So that's kind of my view. It's quite subjective. I think it's hard to kind of substantiate numerically, except to say, I mean, probably there's 2,000 to 3,000 companies out there that are investable per year right now in MENA, generally in tech. Can you if you want to do a sector, let's say a sector is like 10 to 20% of that, is that enough companies to choose from per year? If you have a venture portfolio of 40, 50 companies you're going to build, I'm not sure. But
I'll take your question to Sara and Waleed. Is that enough?
Yeah. Well, I'll keep mine short. Like in general, like I'm more of an advocate for specialist funds rather than generalist funds, because you're able to provide founders with like deeper expertise and focus. However, having said that, in the MENA region, because we're still quite nascent, it depends on the sector. So if I'm looking at a fintech focus fund, I think there's a lot of opportunities out there. But when I'm not exactly sure what their investment mandate is, but when I read their press release, I also kind of took it as they're going to be focusing on deep tech, on AI, and there's not a lot of opportunities that I think that are available in the MENA region, or UAE, I believe is where they're focusing at seed stage. So in that sense, I think if I was investing in AI, I'd probably most likely go more towards building a generalist fund versus specialist. But in general, like being a specialist, I think you're able to provide your founders with better value add services, your more networks, more connections, more expertise, more focus.
I'm going to do this a bit differently. First of all, I really can't comment on the announcement. There's some details there that I just couldn't understand. Not sure what's the closing status of the fund either. But in general, in terms of generalist versus specialist, you have to determine at which dimension. So you could be specialized stage-wise, right? You can say I'm early stage investor versus late stage investor. You can say I'm specialized in a certain geo, MENA versus non-MENA, or GCC versus North Africa, and so on. You can also be asset class generalist versus specialist. You can be VC only, but also do VC and PE. So there's so many orientations for the word specialist that it's really tricky to talk about this without taking into consideration all of this. So I think for MENA, because it's a nascent ecosystem, the specialization at the level of stage makes more sense. So for example, we see InvestCorp now, they created a pre-IPO fund. Sella, for example, is one of their holdings. So they're specialized in that kind of stage. But also we're seeing, to be fair, we're seeing fintech funds, we're seeing gaming funds, we're seeing deep tech funds where the GPs have to have a certain level of academic knowledge to be useful. We haven't seen any crypto funds that are large enough to mention here, but that we see that in other markets as well. So I guess the word specialization can be a bit tricky. It depends on what dimension you want to focus on. But you can be focused on stage and geography together. You can focus on asset class. You can focus on, like we're talking about here, sectors. And I think what's nice about MENA is we're experimenting with all of these, still, we're progressing, and that's how ecosystems grow again.
Great. Thank you, everyone. I want to be respectful of your time. I promised 50 minutes. I want to end with one question for everyone. Now, in MENA, we have hundreds of angel investors and maybe hundreds of VC firms. Shout out to Hussein Al-Attar, who gathered all of them in one web page, multiple web pages, accelerators, VC funds, and everything, actually. And when I look at that list and scroll down, it's endless. I think I counted like maybe 300 or 350 investors, institutional investors, like VC firm or angel group or an accelerator. It's really overwhelming that we have all these investors in the MENA region now. Now, for founders, what's the best way to reach out to these investors? From your own point of view, from your own practice, what's the best way to reach you?
I'm a very community-oriented person. So start with the community. In every market, there's a community that is similar to what the founder is doing. Be part of that, learn from them, connect through them. A warm connection is always better than a cold connection. And the other thing is, do not try to innovate in structuring deals with investors. It's a very attractive proposition, but it usually ends up in a bad result. So follow market norms and keep it simple.
I would agree. I think warm intros are always best, but I think we're all on the lookout for deals. We're all receptive generally. Sometimes we get overwhelmed with volume, so just on cold outbound. So a warm inbound is sort of easier to kind of put at the top of the list of stuff that's coming in. But I think we're all receptive and we all want to look at deals. We all want to look at deals generally. So we're easy to connect with.
I think we receive a lot of outbound pitches from so many different startups. So it's best to see someone within your network that can also generate a warm welcome, like even as simple as like going on LinkedIn and seeing common friends and asking someone to connect you, like usually works, but just utilizing and leveraging the network and the ecosystem that you have.
Okay, great. Well, thank you
Yeah.
so much, everyone. Would love to have you
Thank you.
again sometime in the next few weeks. Thank you.
Thank you.
Thank you so
Thanks,
much.
Thank you so
Thank you.
much, everyone.
Bye.
Take
Bye.
care.